Veg, good morning. Morning. Is everybody able to hear me okay? Let's do a little audio check real quick. If you can hear me, throw up a Y in the little chat box. JP's the echo. Did I fix the echo now? Turn the music down on my computer. All right. Morning, everybody. It's going to be a good stream, I hope. Going to, let's see here. Whoa, what's going on there? There we go. All right. Thank you all. It's really good to be back. And, man, I got to tell you, it's been a break for sure. It felt weird being away for so long. And trust me, it feels good to be back working and looking at the charts and getting the trading. So let's get into the charts, and we'll take a look at, I've got a lot of prep work having been done coming into today. So we're going to talk about a few things. Just one last time, can everybody hear me okay? Is the echo gone? Just throw up a Y real quick, make sure. I don't want to go through all this and then realize that you can't even hear me. All right, good stuff. Just real quick, I am not a financial advisor. The information on this channel is provided for education and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please feel free to read this. That way you know. Obviously, I'm not a financial advisor, and I'm not here for advice. I'm only here for education. Let's get into it. All right, so taking a look at oil. Coming back off of last week. I'm not going to go super in detail with all this stuff, because if you want to learn more in detail, of course, if you're new here, or if this is the first time viewing my stuff, I've got plenty of playlists on my channel for learning purposes, but I definitely wanted to have some notes up here for you all, so that way you know exactly what I'm talking about. Coming off of last week, peak formation, we got a consolidation down low, a breakout that failed, first green day, day one, 3-day cycle. Day 2, 3-day cycle, which is also the opening range for the week. We had a breakout, so that's the first day of breakouts to the upside. That leaves us with today being day 3 of the 3-day cycle. I've measured from the low of the week up 250, or low of last week, excuse me, 250 pips up. We're in a 250 pip box. I don't really have a trading setup in mind for today other than we're at the high of the week. So if they were to put in a peak formation high or something like that at a certain time of day, then that would indicate to me that maybe the reversal is imminent. But other than that, we are in a breakout market to the upside, so I'm going to have to roll with that until proven otherwise. Also, real quick, I just want to show you all there it is, the news calendar for this week. We have news on the calendar for today at 10 a.m., and then we have news on the calendar for tomorrow for the euro all day long. But oil, of course, tomorrow we have inventories at 10:30 every Wednesday. So take a look at this. We're on the front side of a move, peak formation, low, push to the upside. No weekly boundaries have been broken. The previous week's highs all the way up here. Still technically still on the inside, but for the new week itself, we are on the outside of the new week's opening range high. All right. So that's good. Oil's fine. Let's take a look at the indexes real quick. NASDAQ, we had this massive peak formation high, peak formation low. Oil news is on, very well. Oil news is on Thursday. Anyway, so peak formation high, peak formation low last week, creating a massive range. And then we had a peak formation low day 2 of the 3-day cycle. Breakout fails. Day 2, 3-day cycle was inside of the previous day's range. Friday's high, we broke out yesterday on Monday. That's the first day of long breakout traders in the market. And then today we've broken the previous day's high and closed, well, not closed, but We're back on the inside, essentially, right? We've made the higher high up here, and then now we're pulled back down on the inside, coiling sideways. We're in a 300 pip box coming off the peak formation from the low. Well, from high to low, let's take a look. The peak formation high was made at this 100 pip level, and the peak formation low was made at this 100 pip level. I've measured 300 pips. We're on the inside of that range. I'm looking at double zeros and double zeros, and looking at those areas to see, with those levels of rise, do we have a setup forming or building or something like that for this week? Like I said, peak formation low. Think about those blue thumbnail videos, right? Peak formation low, 1, 2, 3 to the high. I have no idea what it's going to do. I'm just going to continue to wait and watch, especially because it's only, we're coming to 8:37 right now. Indexes, 9:30, 10 o'clock. Those are the times to really be watching, in my opinion. So I'll be waiting for those times and seeing if anything is built up over the course of 3 hours or 2 hours for a trade. US 30, slightly different story. It's extremely different story. Coming off of last week, multiple days of breakouts, right? So we had breakouts, day 2 breakouts, and now we are coiled down low. 500 pips of drop from this breakout level. So they broke out here, dropped. This is 500 pip range down. From that breakout level, we had the opening range yesterday, which was a very narrow range. Friday's high, Friday's low. Friday's low was also the low of last week, so I've got that labeled down low. They broke out. It's pulled back down to the low. We're coiled sideways. No idea what it's going to do. That's just all the information I have. Opening range, high and low. This is the low of the week. We made a higher high. We traded back down into the low of the week. We have 500 pips of drop. Those are all the little details or little nuances that I'm kind of looking for or at. Coming into 9:30, 10 o'clock. We'll see what kind of pattern is formed. Take a look at gold. Let's see. Day 1, 3-day cycle on Friday. Peak formation low at the low of the current week. And yesterday, Monday, was the first day of breakouts. They broke out of Friday's high and closed on the outside. That was also day 2 of the 3-day cycle. And then now today, day 3, day 1 breakouts. They've dropped down 3 levels of drop, 50, 50. Oh, excuse me. Peak formation high. So I think it was 3 levels of 50, right? So peak formation high, whatever it was. But 3 levels of drop down, and they've gone into consolidation, and now they've reversed back up. So peak formation high, peak formation low. They've gone vertical back towards the high. That's really all I know at this point. I did have a note up here about Friday's breakout. Is it going to succeed today? Is it going to fail? Or Monday's breakout of Friday's high. Is it going to succeed or is it going to fail? Or is this breakout pullback continuation? I don't know. But this is my level. And I've got 300 pips of rise coming off of the low of last week or peak formation from last week. So I've just got all those things labeled. And depending on Monday, Tuesday, I might not get a trade today. I don't know. My goal is not to take a trade, but if something sets up really well at one of these levels, then, of course, I will be willing to take it. We'll take a look at the pound. Now, this one I did have I listed out some stuff here just so I kept my thoughts a bit more organized. Coming off of last week, we have 3 weeks of breakouts to the upside, and I'll zoom out a little bit here. 3 weeks of breakouts to the upside, breakouts, and breakouts, which is great. And coming into the last week of breakouts here, peak formation at the low of last week. Day 1, 3-day cycle. Day 2, 3-day cycle. Monday was day 3. This is the first day of breakouts this week, or in general. They broke out. They closed. We had push 1, push 2, push 3. And I did have the high of day labeled prior to the session opening. And that was this level here. And now we broke out already of that and are continuing to push higher. So some considerations that I had up here: 3 weeks of breakouts to the upside, peak formation low on Friday, 3 levels of rise. The 3 levels of rise was from double zeros. We're up at the high of a 100 pip box. Lower low in London. They broke out. They pulled back, but they made a lower low over here. This is a 15-minute chart in London. And let's see. Oh, and I also had the hourly chart up there. So they did 1 hour, 2 hour, 3 hours, or maybe this is peak formation low, 1 hour, 2 hour, 3 hours to the high. I don't know. And then also one of the considerations that I had on here was Tuesday. It expands the range. It could be a strong breakout to the upside, blowing off in the direction, or maybe a higher time frame is doing a larger range expansion. We could take a look at the daily chart and just kind of look at the overall kind of bigger picture here. And that could be happening. I have no idea, right? This could be doing a larger range expansion that on a higher time frame. I don't want to be trying to counter trend. So I like to just put that on there as a reason to, you know, keep your cool. Don't just get excited because it's at the high of the week or whatever. But I've got the facts up there. I've got the details up there that I need to see. And then I just wait for a peak formation high to get put in place, which I have up here. Waiting for consolidation, peak formation high to form. You know, we're still on the front side of a move. If this were to turn into a first red day or something like that, that would give me a lot more indication to be watching this pair. Not just trying to counter trend something that is going vertical. That's silly. That's how you get kind of punched in the face, if you will. All right, Euro USD. We had an inside week last week, so I've got these highs of the previous weeks labeled off. Peak formation low at the low of last week. This is similar to the pound, day 1, day 2. Day 2 was inside. Day 3 of the 3-day cycle, breakout. Day 1 breakouts. Day 2, I had the high of the day labeled off prior to the session opening. No, I did not, because I've been doing this. There we go. Now we have the high of the day labeled off, and there's a peak formation high that was made in the gap time. There's a, was this a 4-bar pattern? Up, down, up, down. There's the engulfment on the 15-minute chart. We triggered the high of that inside week, which is good. Like to see that. I don't know which one to really... Either the pound or the euro is definitely on my list of you should be watching these pairs. I got to tell you, the euro is looking a little bit more clean. Peak formation low, 1, 2, 3 to the high. Do we have 3 levels of... Oh, I think the pound... The reason I was watching the pound is because of the 3 levels of rise. But regardless, we went from the bottom of a 100-pip box. Now we're at the high of a 100-pip box. Could still watch this. US dollar CAD, I really didn't do as much prep work on this one. This one had been front side, peak formation at the high. They made a lower low. Day 1 of breakouts to the downside was Monday, yesterday, opening range. We've expanded the range and broke out, given kind of this little 3 peaks pattern on the outside. Not really my favorite. Could we continue to trend down? Sure. We got the low of the previous week down here, which could also be considered where that pump began. Peak formation high. Now we're on the backside of a move. We could be going back down to that area. Is it set up right now in the current present moment for me to take a trade on this? No. So I'm probably going to look at some other pairs. All right. Morning, everybody. And I hope you all are doing well. Does that, all those explanations, they kind of make sense, you know, as far as the details that I'm looking at? And from those details, understanding, like, what do those details mean? Because those details are what are going to give me my indications to what kind of setup to look for on any given day, right? So day 1 breakouts, usually on day 1 of breakouts, you know, you could see 3 levels of drop, trend trades, things like that. You also have to take into consideration that it is Tuesday, right? Tuesday often expands the range, just like Stacey always talks about opening range, initial balance. We could expand the range, things like that, right? So just keep on letting those things, those thoughts run through your head. Look at the templates and tell yourself, okay, well, what day is it in the 3-day cycle? What day is it in the week? Did I have a signal day, X, Y, and Z? And then, of course, based off of each one of those details, each one of those setups, for example, day 1 of breakouts, what do you need to look for? Day 1 of breakouts is, you know, I'm looking for 3 levels of drop. Okay, do I have 3 levels of drop? Did we get a peak formation at the low of the day? Yay or nay? That's the setup. If it's not there, then I don't have a setup. 3 days of breakouts. If we're on the 3rd day of breakouts and we're at the high of the week, I'm looking for a peak formation high to be put in place. Maybe 3 levels of rise on that 3rd day. Like, those are the types of details based off the type of setup or signal that you're receiving. Just because you have a signal or just because it's day 3 of the cycle doesn't mean, hey, I'm going to get a trade today. You know, it has to do other things within that criteria or category for me to really find it to be a good candidate. So let's take a look at gold real quick. Like you just said, Kel, we can take a look at it again. Let me get up to a 15-minute chart. Oh, peak formation made on Friday. Day 1, 3-day cycle. They attempted to break out. That breakout failed. And more importantly, you know, well, just as importantly, we had volume trap down low in a 50 pip box, which is a peak formation, right? This is a larger three push pattern, or W, whatever you'd like to call it, peak formation low. Giving us day one of the cycle. Day two was Monday. And also that was a day one of breakouts yesterday. Now, yesterday was Memorial Day, holiday, really probably not the best time to trade. And in fact, I did a little thing yesterday. I took a look, just out of curiosity, right? I didn't trade yesterday, but they moved this market. Oh, is he going to put it up there for me? Oh, don't be rude. Very well. Let's take a look. We'll delete this one here for a second. Just take a look at why, or the reason for why I don't like to trade on holidays. A lot of times they become very consolidated. They turn into narrow range days. And do I really want to trade that kind of junk? Not really. They also have very low volume. And apparently I'm not allowed to do this. Fine, we'll do it over here. So if you just take a look at the volume indicator. Now, I don't use volume at all. All right. That's not something that is important to me, really. But when you have a Memorial Day or, sort of a holiday, banks are closed, all that kind of stuff, and they're moving this on low volume, that's not the kind of trades that we're looking for. We're looking for the things that are going to, build up and explode and things like that. So if you have a day with low volume and they're moving it on low volume, you might not really get that explosion that you really want to see. So it's a good thing to just stay out, go for a bike ride, go. What I did yesterday, I worked on my garden, Okay, so now what I'm going to do is I am going to get my screens up here so I can see everything. And I definitely want to be watching the indexes, gold, oil, same things as always. But I need to choose a currency pair as always. So I've got the indexes up here. And I really like US 30 for it's something that's calling me to it. NASDAQ's looking pretty good as well. But the way that this broke down, we've got this coil sideways. It's kind of early in the morning. So I'm going to be watching these. I've got gold up here. Gold is not really screaming at me. It's not, calling my name as much. So it is what it is. But I do think that I would like to be watching one of these currency pairs, if not both. So if gold starts to set up a little bit better, one of you can maybe yell at me in the little chat if the peak formation gets put in place or whatever. But, oil is really not calling me either. But this is good. I've got everything kind of set up here. And now I'm going to go down and take a look at 5-minute chart. We can get up the 100 pip box. Take a look at the levels. And just wait for peak formations to form. M's, W's. Things of that nature. Now, there's already one that's formed on the euro. So we may already have a high of day locked in place. I think that my next video on YouTube, I haven't really done one on the different time rotations. I've done time engulfment and talked about once they have people trapped, when they engulf certain times, it's kind of like the solidification of them trapping people in an area. But I think the next YouTube video I'm going to do is really to talk about, 4-hour, 1-hour highs and lows, and, opens and closes of bars, and the ways that you can view price in a certain way that is straying from the norm, if you will, because when certain things happen at certain times of the day and they've consolidated in a certain manner, and then they start to release price to the other direction, those are the kinds of trades that we're really looking for, especially when they come off of course, the high and the low of the day. So I'm really thinking about doing a hourly rotation video talking about time in detail. Not talking about trading setups, not talking about any of that other stuff to confuse anybody, but just simply focusing on consolidations, time of day, and how whenever those levels get hit and when they fail, they tend to go back to the other side of the range. If they break out and pull back, you could be in a 4-hour range expansion or a 1-hour range expansion. And if you have a larger 3-day setup in play and then those things are happening, it can give you a really clear indication of where you should be putting take profits and things like that. So I think that'd be a really good thing to talk about. It's something that's definitely helped me, not only for, taking trades, but staying out of trades. If they're consolidating above a 4-hour level, and it's coming into 10 o'clock or whatever, and, that's the new 4-hour time rotation, and 10 o'clock opens up on the inside, do I really want to take a trade and let's say that they've pumped it back up as well, right? So they've made a 4-hour high and a low, and they've pumped it back up coming into the new 4-hour rotation. Is it really smart for me to look for the long trade yet until they go back to the outside? Well, a lot of times you'll find that you'll get trapped trying to do so. You try to take the trade, it goes up, consolidates, and then runs against you again. They take out the low, put in a peak formation at the low, and then go vertical. It's like, oh man, I should have just waited for them to take out the low first. Those are like little key indications that can keep you from taking those little silly losses that you don't need to take. You can just be patient and wait. All right. So it is 8:52. We're about to come into a new hour. The euro has a lower low in place and also peak formation at the high of the day. Does that mean that they cannot go higher? No. It means that they could absolutely go higher. But I have a high in place, and that's where I'm going to mark my neckline. Remember back to those blue thumbnail videos where I talked about peak formations, and when you get a neckline of an M, they come back up. This is like my area where I want to see them working up into that level, or they could come back up there. It's a good day. I trade only time rotations, start of 5-minute, 15, and so on. Yeah, that's really good, Bowser, but the 5-minute rotations can help you time your trades, I think. Absolutely. When do I actually click the button? But I would say that the lower you go, the less significant, right? Because the lower you go, 1-minute chart, it's like, well, I could do a 1-minute time rotation too, all the way down to a 30-second, 1-second chart, whatever. You could just keep going as low as you want. But when you have a 15-minute, 1 hour, 4 hour, and the box is really built a certain way, it's a larger box or a tightly wound box, breakout, pullback, those are really the time rotations you want to see, because this entire style of trading is based off of the daily charts, the weekly charts, and we're just down on a lower time frame taking advantage. When you kind of put it down in its most simple form, right? We're trading the cycles, we're trading market cycles and things like that, but we're trading based off of daily levels, and we're day trading them in a way that once one of those levels is hit, higher time frames, they can use much wider stops and things like that, but we're getting in at the extremes, or we're getting in low of day, high of day, whatever it may be. And then based off those time rotations, when things start to explode, because as Stacey talks about, the other time frame traders, the 1 hour, the 4 hour, the daily, everybody's on the same page. Those are the types of trades that are going to move strongly and significantly because everybody is on board. And then there's times where other time frame traders, 1 hour, 4 hour, daily, weekly, are trapped trading into an extreme, and those can be the strong reversal trades as well. Engulfment of time. I think that I can't remember if it was a long time ago. Like, that was one of my first videos that I made. So you might have to scroll back a little bit. But I've tried to limit certain videos, like the amount of videos on my channel. There's a lot of times where I've gone through and done a cleanup once I start getting up into the hundreds of videos. Just to try and keep it as clean as possible for people to sift through and actually find information. I don't want people to have to sift through 25 years of me saying the same stuff over and over again. So it should be in that playlist. Somewhere in there in that playlist. and it might say something about time engulfment in the thumbnail or something about time in the title. Junior, doubt I just pronounced that right, so please don't yell at me. But is this going to be uploaded on YouTube? Are you talking about the live that we're doing right now? Because this is all recorded. This is all gonna stay on here. Okay, paying attention to the clock. And I might get quiet for a bit just because I need to, I do need to focus. You know, I do need to make sure I'm not being ridiculous. I need to make sure that I'm, you know, taking the best trades that I can. So if I do get quiet and I stop speaking as much, just know that I'm still here. I'm just, you know, I do need to trade eventually. So I need to find a good balance between, you know, making sure that I'm helping you all and hopefully helping everybody's understanding, and of course keeping up with my own trades. I don't want to miss something just because I was talking, which has happened in the past, but that's okay. Someone asked about the, oh gosh, which chart did I, okay, the CAD. Yeah, so the CAD, this is one of the ones that I had labeled as, you know, we had a front side move, peak formation high, first red day. First day of breakouts to the downside, first day of breakouts to the downside, measure up 3 levels. Now this is the CAD, so it's a little bit less volatile, but we're in a 25 pip box, and we've already broke out a previous day's low. I don't really see a setup that I'd be willing to take on this one, personally, as of right now. You know, this could do a huge range expansion of this entire range, but or it could consolidate the low of the week and reverse. I don't really know. So I'm gonna probably hold out on the CAD for a better pump up. Euro CAD looks better. Hey, so I actually just noticed this. I think last week when I came back from my honeymoon. It's a really cool thing with TradingView that you can do that I actually didn't know you could do. I think they updated and made it slightly different. So you can actually put your, instead of having to click this thing and do all this, which is really annoying to me, you can favorite your different watch list up here, which is pretty cool. You said EuroCAD, right? Yep. Yep, day one breakouts, Monday. Now, you got to make sure that this isn't volume trapped down low. But I do agree. First day of breakouts in Asia, London, New York, peak formation high of day. Breaks down, pulls back right into the first hour of the session. That might have been a much better trade. Yeah, that pop out's really annoying. It just doesn't feel smooth. So I really like the favoriting feature. All right. Okay, so they've pinned down through the low of the week. We've got this big coil consolidation down low. Does that mean I'm going to take this trade immediately right this very second? No. I'm going to wait for the time. But we are coming into a new hour. Okay, oil's put in a peak high. Right at that 250 pip box level too. Take a look at, where's my mouse? Gosh, I lost my mouse for a second. All right, so there's the 100 pip box. We up in, where are we at? We're at 50. So they put in a peak formation high at 50. 1, 2, 3 to the high. They've engulfed the 1, 2, 3. You can see the volume that may be caught up here. Peak formation low, 1, 2, ending in 123. Now, of course, that could just continue to go higher. I have no clue, but we will continue to watch. So also 3 sessions of breakout. Now, it's only day 2. It's only Tuesday, but that is one of the setups that I look for. Now, one of the better 3 sessions of breakout trades that I find, I mean, we just had one. In fact, the NASDAQ did it last week, and then gold did it, I think, the week before or a few weeks before. Let me find if I can find my little picture of it. Let's see. Why is this? My computer's going mighty slow. Holy cow. Oh, this is the wrong study binder. Let's get this thing pulled up. This Friday. NASDAQ. Is that the 24th? I think so, right? Was it this one? Yeah. So this was from Friday, right? Where peak formation at the low of the week. We got lots of weeks of breakouts, and they've came up in this 1, 2, 3 pattern. Peak formation at the high of the week. But what I'm talking about, the 3 sessions of breakout. Notice how Asia lifted price up, and then London. This is the low of London. They put in this higher low above the previous day's high, and there's a big gap to get back down there. And this is a 1-hour chart, but if you go down to a lower time frame, you would notice that there's ramping volume into that last leg, which is really good. It's really the 3 things. We're on day 3 of the week, the last day of the week. Lots of weeks of breakouts, 3 levels of rise, 300 pips, and then that breakout lifting price. London puts in a base and then continues higher, ramping volume up into the high, and you can even see the last 1, 2, 3 to the high. Like, this is a perfect opportunity with criteria for that reversal short. And I think I've got gold here as well. Is this it? Yeah, here it is again. So this is gold on April 12th. Again, Asia lifts price. London puts in a base. We got the ramp into the New York session, and you can see the ramp going vertical 1, 2, 3. Unfortunately, this happened right after the session ended, but if you wanted to wait around, kind of recognizing this opportunity, the first target should always be previous day's high. And I think this was one of those days where this was like 300 or 400 pips of rise or something like that. So really good opportunity, but it's the criteria of how the trade's set up. We're up high. I think there's multiple weeks of breakouts, and on the last day of the week, Friday, Asia starts to lift price 1, 2, 3, ending in 1, 2, 3. London putting in that higher low above so that they can move down through it quickly. The ramp so they can move down through it quickly. And then the peak formation at the high of the day and the high of the week. Those are all the things that kind of go into finding those really good. Oh, Rim, got you. I thought you said you were, I don't know if you were long on something. Anyways. Okay, 9 o'clock. Coming into 9:30. Get rid of this. And where's my other chart? There we go. Set gold, high of day. Yeah, I don't know about that. I mean, not to say that it can or won't. But, the first hour has gone vertical, which is good. Day one of breakouts. I'm trying my best not to speculate. I'm not going to, I don't want to guess direction. I just want to wait and see. When it happens, it'll happen. But I do like to wait for certain times of the day. Let's see. Hi. Okay, so this template here, peak formation low in Asia, peak formation high in London. We're in 3-level box, so this is 1, 2, 3 up. This is 1, 2, 3 down. Got 1 day of breakouts. It's interesting. Oil is scooting. Oh, my neck just exploded. Holy cow. Rem, what is longs day 3? Which pair? All right, we're into that second hour. Oh, gotcha. Yeah. Well, so the US 30 last week was a different scenario. I wonder if I could find. Let's see. Yeah, this one. So the Dow this was on Thursday. This is the kind of day one breakouts, right? So we've been going up lots of time. Day one of breakouts, Asia again starts to lift price. There's the base. There's the ramp. High of day. Peak formation starts to break down. So I wasn't able to take any of these trades, unfortunately. Number one, I was really trying to ease my way back into coming back from vacation. I really don't want to be overly excited. I was extra cautious, extra aware of my emotions because I don't want to come back from vacation and just want to take a trade. That's absolutely not what I'm wanting to do. Number one, that's kind of managing myself. But number two, when they broke down off this peak formation on Friday on NASDAQ and then also that trade from Thursday, there was news. The news calendar was really keeping me from executing. I like to take trades after the news. Indexes, I like to take trades after 9:30. Was there opportunity after the news and after 9:30? Yeah, sure, but it had already moved so far that I felt like my risk was going to have to be too large. In hindsight, it's easy to say that, well, it just kept going. You should have just taken the trade, but in the future, will that save me with that thought process? Absolutely yes. Over my vacation, I did read The Best Loser Wins from cover to cover, and I really loved that book. Anybody who has not read that book, I highly suggest. I think it's like $20 or something like that, so it's not exactly breaking the bank, but fantastic book. And one of the things that I did like, I don't really care for the way that he trades necessarily. I'm not looking to change my trading style, but I did like the way he talks about psychology and things like that. And one of the things he was talking about was, his friends talking to him about, well, the Dow's down however much, aren't you looking for a buy? And he says, well, I'm going to buy low and sell lower or something like that. And it kind of makes me think about, like, just because something's down super duper far doesn't mean it's going to reverse. And we've seen that plenty of times in the past where maybe we have 3 weeks of breakouts to the upside. We're in the first week of breakouts to the downside, and you're looking for reversal trades to go long, and it's like, well, we're in the first week of breakouts to the downside, and the market's expanding. Why am I looking for a reversal? Why am I not just looking for pump and dumps? Something to think about, and one of the things that stood out about kind of what he was talking about, and kind of correlating that to how we trade. Hi Cam, do you think I should skip trading tomorrow? I mean, tomorrow's Wednesday. I'm going to be watching to see how the 3-day template sets up. Today it's Tuesday. It could be a wash. Who knows? Or even the backside of the week, right? Keaton, it's really up to you. I would say that the best thing you could possibly do, though, is just, if you do trade tomorrow, don't come in looking to take a trade. Don't come in to take, look direction. Kind of like you just saw me do this morning. Like I'm not going to say everybody should be doing this, but at the same time, if you want to perfect, we'll call it, perfect the process or whatever. Exactly what I have here. Just come in every single day and do this. And in whatever day that you're on, let's say, we've got day 1 breakouts. It's day 3 of the 3-day cycle, so now maybe we have day 1. Who knows? What setup is associated with day 1 of breakouts and day 2 of the week? What is price doing? And then say, do I have a setup? That's really it. When you break it down like that. So like right now, we have day 1 of breakouts and 3 levels of drop. We're at the low of the day, or we're approaching the low of the day. Should I be looking for a trend trade? I don't know. Peak formation low, 1, 2, 3 the high. Might be kind of risky, but what I'm really trying to get across, though, is just the thought process of, if tomorrow is going to be a low volume day because of, you said it's South African. I don't know how much liquidity South Africa really has in the markets. As long as the U.S. markets are open, then I would say that's probably going to be fine. We're also coming into a new month. We're getting towards the end of this month, and that means that there's certainly going to be some very large moves within the next couple weeks. Yeah, especially the U.S. elections, Keaton. You can absolutely, whenever the U.S. elections happen, market is probably going to act wild. But that's fine, because guess what? When the market goes, it's super volatile, just shoots up or shoots down or explodes or whatever, that's going to set up a 3-day template of some kind. So you got to start looking for, okay, presidential election, 3 levels of rise, consolidation, first red day, explosion. Like, that should be the thoughts. It's not like, well, should I be trading on that day or not? What's the template? That's the only thing you really need to worry about, in my opinion. What time is it? What day of the month is it? We're coming into a new month. Okay, so start thinking about the high and the low of the current week, or previous week, previous month. The first day of the new month. Where are we at? Okay, we got 15 minutes of the open. I'm going to go... I'm a well-hydrated human being, so I'm going to go take care of that, and then I'm going to grab me a little drink so I can be prepared and comfortable, if you will, as we get into the session. All right. Okay. Let's get some caffeine in me. Uh-oh. Yeah. See, I don't know if you all remember gold from... Now, I have no idea, all right? Gold from... In fact, let's just scroll back real quick. Pin the low, coil sideways. These are the types of setups that make me feel a little uncomfortable. Gold just did something very similar last week. And I know that a lot of people probably caught that short. I did not catch that short. When it sets up that way, it just makes me feel uncomfortable. And I know that it's a great trading setup. It's a great trading opportunity. You know, we had this low down here. They popped it up, pinned down through the low, went sideways, coiled. Same exact kind of setup. I don't know whether or not this is going to do the same thing. But that would be the idea if this is a, coiling sideways for an explosion in a down moving market. That could be... What did I just do? There we go. Gold is breaking previous day's high. Dude, where'd my other screen go? There it is. I've got gold up on my other screen. Gold is just going vertical right now, parabolic. I think that's going to be one that I would just be... I'll come back and I'll take a glance at it. If they put in a... Because they broke out, they made a higher high, they pulled back, they put in a peak formation low now in the New York window, and it's now going vertical. This could be a strong parabolic move. I don't want to... if you look at it, dump, consolidation, and the pump, this could be a day 2 range expansion. I don't really want to get in front of that. We will see, though. I've got my level marked out on my other screen in order to watch that, because if they do go up there and put in a peak formation high and run the low, it could be okay. But I'm not going to get in front of a freight train. Get my broker logged into. There we go. We've got about 10 minutes to the New York Open. We just put in this little W down here. Are we at the low of the day? No, not quite. The euro. Tweezers, a 4-bar reversal, a part of maybe a larger pattern. Now, I don't know if this is going to actually play out. And that's not really a setup that I'm privy to taking, if you will. Going long back up into the high at the high of the week. I understand we're on the front side. It could be a trend trade, but I'm just not going to. Or low-hanging fruit, even. But I'm just not particularly interested or fond. Third push into double zeros on GU. 5-minute chart says maybe, but this would need to do quite a few more things. This is an ascending triangle. There is a bit of a little ramp there. DJ is really interesting to me. Dude, what is my dog doing? Just sitting under my desk pacing. And I gotta tell you, my cable management is not good. So I got a lot of cords down here. My dog gets down there and starts freaking out. All those cords just starting ripped out. She makes me panic sometimes. You gotta stop. All right. We're going to keep GU up there. Oil, I really don't have any particular anything particular that I'm searching for, so probably going to wait. This is a 1, 2, 3. I don't know if we're going to engulf this or not. Keaton, I live on the East Coast of the United States, so London is 2 a.m. to 5 a.m. for me, and I am asleep. I'm asleep, or else I would, because there are a lot of really good trades in London. There's a lot of really good trades in Asia on certain days, but I would exhaust. It's not a long-term solution. I would exhaust myself, and I would just be looking, you know, just because I'm awake at 2 a.m., it's going to make me feel obligated to take a trade, and I don't want to do that. Trading is supposed to provide freedom, which it does. It's provided me a lot of freedom, and that allows me the freedom to sleep. Yeah, I know my jokes aren't funny. They're terrible. US 30 definitely has my attention right now. The way that this is broke down and pinned lower and coiled sideways, the New York Open is going to be very interesting to me. No tornadoes? Yeah. I've heard South Africa is a beautiful place to be. Is there anybody in here from like Dominican Republic, Grand Turks area, or Grand Turks area, kind of Bahamas or anything like that? That's where my vacation was. If any of you ever get the chance to go to the Dominican Republic, the Dominican Republic is, number one, excuse my ignorance, but I had no idea how mountainous it was. What a beautiful place. Holy cow. We did the, it's like a waterfall excursion or whatever. It was really fun. Go jumping off waterfalls. Asia and London setups. Nathaniel, I can do that. But what I'll tell you is that the setups are exactly the same, right? So the setups that I'm looking for right now in Asia, or excuse me, goodness. The setups I'm looking for right now in the New York session are the exact same setups that I'm looking for if I was trading Asia or London. Broken down market, 3 levels of rise, day 1, day 2, day 3 of breakouts, day 1, day 2, day 3 of the 3-day cycle, high of day, low of day, first red, first green day, you know, high of day, low of day. those setups are going to occur in one of the 3 sessions. And if it happens to occur in Asia or London and I've missed it, then congrats to anybody who, caught the low of the day in one of those sessions and was able to trade those. Yeah, Shane, I've seen what's been going on over in Haiti, and it's heartbreaking, honestly. There was a group of missionaries that were just there, husband and a wife, and I guess they were unalived, if you will, in Haiti. It's very sad. Benjamin, so the US 30, what I was looking at, number one is gold did the exact same thing last week, down moving market, days of breakouts, lower lows, coil sideways above the low, and then an explosive move. So in 3 minutes, 9:30, I'm going to watch and see. However, we're also at the low of the week. We've broken down. We've got 500 pips of drop and a coil. If 9:30 were to engulf a range to the upside, breakout, pullback, we'll see. But US 30 is it's looking mighty fine. I'm definitely the most interested with US 30 right now. Based off of templates and setups, not based off of me trying to trade a direction, okay? It kind of looks like it's going to be a dump, Keaton, but I really couldn't tell you until, like right now, it looks good, but I don't like to get in before 9:30 because of the extreme volatility, especially on US 30. But it looks like that pump and dump setup that we just saw on gold last week. But we're also 500 pips of drop down, so I really couldn't tell you. We're going to see. Okay, we got 1 minute to the New York Open. Yeah, there it goes. Honestly, I might have just missed it. It's the same exact setup as gold last week. They did the exact same thing. I'll pull up gold here in a second. I'll show you all what I'm talking about. I just never feel... Oh, man. Yep. I probably just missed that. Very well. Very, very well. That's all right, though. I'm not going to chase it. If I get a pullback for a continuation, we'll see. But I have a feeling they're about to start jumping, 25, 50 pip increments at a time. That was a good setup. Did anybody catch it? Anybody catch the US 30 drop? That was 50 pips in 1 minute. Now I am not going to chase, especially we're 1 minute to the New York Open. God, I don't know how far this is going to go. Yep. Front side of a move. Day 1 breakouts. Day 2 of the week. Expanding the range to the upside, just as it should. Yeah, there is that news at 10, but I mean that was a picture perfect setup, if you will. Let's I'll take a look. I'll show you all what I'm talking about on gold for anybody that missed the first explanation, because they literally just did the exact same thing last week. If my computer would stop being ridiculous here. The important thing is we're in a down moving market. And how do I identify that we're in a down moving market? We're in a down moving market because well, number one, we're at the high of the year, right? We had this breakout on Monday. Breakout has failed on Tuesday, day 1, day 2 of the cycle, day 3 of the cycle. It's Wednesday. There's the pen to the low, pens to the low, and the pullback, and then the engulfment to the downside. Literally the exact same setup. You can look at this, and then look, it looks almost exactly the same. Just because we're down low, that's what I was kind of talking about. What Tom was talking about is just because we're down low doesn't mean you can't sell low and sell lower. We're up high within the year's range. We're at all-time highs, I think. We're coming off of all-time highs. We are up high, and we've been going up for multiple weeks. We could be transitioning into a down cycle. But regardless of any of that, who cares about that? Let's just think about it like the setup itself. It's Tuesday. Tuesday typically expands the range, and it's the pump and dump. There's the trigger, sideways coil. They didn't engulf to the downside. They were coiling underneath the EMA and the engulfment to the downside for 50, 75 pips in a few minutes. Cool. Missed it. No big deal. I said this last week. I was talking to some people, but this particular setup, it just always makes me feel uncomfortable. I miss these a lot. And I guess that's something me personally, I need to work on. But I miss these quite a bit because of the coil down low makes me uncomfortable that they're going to pop up and, do whatever. Is what it is. Where would your entry have been? It should have been at 929. Actually, no, 928 was the engulfment of the that M. And again, that's the other thing that always makes me nervous or uncomfortable is when, let's see. So we're at 75, so the top of a 100 pip box. Up, down, up, engulfment at 75. That's supposed to be the entry right there. Also at previous day's low, right? And then looking at pattern-wise, classical charting, descending triangle. Hold on, EM. There's a heart in the way, and I can't see what you said. There we go. Um, has there been any reversals with the gold US 30? Yeah, well, in the past, right? If I've tried to take this, I may have missed a detail before. Um, for example, right? If this would have happened, but we're in an up moving market, this could have been a very different scenario. But we're not. We're in a broken down market, so this makes sense. But I've had it in the past where I thought this was going to be this trade, but we're in an up moving market, and I tried to sell a dump and pump, and obviously that doesn't really work out. You get smashed. So, um, yeah. No, it's not even. That wasn't even the holiday rem. That was just what am I comfortable with, and that's one of those setups that doesn't make me feel comfortable. I mean, I saw it, and you all heard me talking about it, but it's again, it's just like, um, and even more importantly than that, we've got a 5 minute chart. They put in a peak formation high at double zeros, and then worked up into it in that 1, 2, 3. You heard me say the engulfment to the downside. Like everything was there lined up for a trade. For whatever reason, though, those just make me feel weird. Yeah, exactly. And I'm certainly somebody who, if I don't feel comfortable with a certain setup, I have no problem missing a trade. I genuinely could care less. You know, um, I'm just going to wait for the one that makes me feel good. I look at the screen and I say, whew, yeah, I don't think that could be any better. We've got that news at 10 as well, which is kind of hindering. Looking at the pound, they broke out of the high of the day in a 1, 2, 3, and then they put in a 4 bar reversal, peak formation high. We've got ramp volume into the last leg. Um, is this like frozen or something? What's up? There we go. What the heck was that? That was weird. Gold. Yeah, I'm not. Let's see. Gold just made a higher high, and I'm just gonna let that set up more for the week. you want to see more of these streams, I really enjoy doing them. And I think that me doing some prep work in the mornings and having some thoughts, my brain up on the screen is helping people. So hopefully, and if it's not, well, I'm trying. I'm doing my best. We got 152 in here right now. Pretty cool. Love having y'all here. NASDAQ looks spicy. And it hurts me that there's news in 15 minutes. It hurts the soul. TR. Well, I do appreciate that. And I've still got that. For all of you that were in the stream. Oh, man. NASDAQ hurts. That was a beautiful setup as well. Maybe even better than US 30. All right, day one of breakouts. Who's trapped? Day one, day two, day three. Peak formation low, 300 pips of rise. Peak formation was made in London at the 100 pip box level. They broke down. This is that coil I was talking about before the session began. I was telling you, it's cooling sideways. They dropped it down, pulled back, 9:30 opened, and engulfed. I mean, that's it right there. That's literally perfect. I bet you this is probably going to go back down to the low of Monday. Maybe. I have no idea. I can't predict where it's going to go, but they expanded the range to one side, and it may have just failed. Right, so we'll see, but that is a parabolic setup. Pump and dump. And again, the news is what is hindering my ability to take these trades, which is fine, because one day we're not going to have news on the calendar, and I'll hit one of these, and it'll be fine. I'll be good. So like the Friday's breakout, right? May have failed. Coil, explosion. Pump and dump, peak formation low, Monday, 1, 2, 3 to the high. Yeah. Anyways. And this is why I don't chase. Beautiful reason of why I don't chase. It's like one of those examples of if you were in the trade when it went, you were able to get almost 100 pips straight down in a couple minutes. But if you try to chase, and you get in down low, you're going to get punched. I'm still watching GU. High of day, low of week, or high of day, high of week, back down to low of week. in 10 minutes. There's a little bit of a difference in the setup, though, on gold where, like, for example, a good day 2 setup, right? We have inside day, the 300 pip box. We're in a range, right? So we're at the top of a 300 pip box. We're at the high of the current week. Friday's breakout has maybe failed coming into the New York session. Lower lows on the inside. Now, I'm not saying gold isn't going to play out, but gold was a breakout of Friday's high, a pullback, and now they put in a higher high. Slightly different variation of theme, if you will, but we got 10 minutes to the news. We'll see what happens. It's also an A-top reversal, and I'm trying to keep it as real as I can with you all. I am terrible with V-top reversals on anything, or A-top reversals. A-top V-bottoms, that is not my forte. I need at least some kind of 4-bar pattern, usually, that will... Do you trade while traveling? No. If I'm traveling, I'm on vacation, I'm enjoying my time. Especially while trade, you know, I just got married and it was my honeymoon, so probably wouldn't be good for my new marriage to be working while traveling. Family comes first and then trading will follow, in my opinion. Still watching. This is good. 10 minutes of the news. I wouldn't mind maybe seeing if I could not trade direction, but if we get a pop-up, we'll see. We're in level 3. 3 weeks of breakouts. 1, 2, 3 to the high. Still front side of the move, but we've blown off, so we got a lot of space to get back down. We'll see. Sean, so the trade setup originally, based off of the actual setup, was short. If it develops into a long, that's a different story. I see where you're coming from, though. And they did just engulf at the low of the day. But again, not trying to trade direction necessarily. This was an actual coiled setup. This is, they would have to retest the low, put in an M, consolidate, engulf. You know, that would be my trade, but we're in a down moving market as of right now. Still watching GU as well. We got 8 minutes. Actually, which news event was that? I think it was like consumer sentiment. I think it was consumer sentiment. I think it's Benjamin. I think it's consumer sentiment at 10 o'clock, Forex Factory. Unless I looked at the wrong day, which would be comical, but consumer confidence. Yeah, that's the one, Sean. Thank you. That is the one. Yeah, Sean, and this is exactly or just about exactly what happened to me on Friday, where it's really set up well for the trade, but I really wanted to be in up here, but because of the news, I'm holding off. So we'll see. There's my there's my notes from this morning when we started the stream. The only thing with that, Sean, is that the 15-minute, by the time that 15-minute bar moves and closes, the move could have already gone 50, 60, 100 pips, whatever. So I do kind of a similar thing where if I have a 5-minute setup, I really like the 5-minute for, intraday. Overall, when I'm looking at the week, I'm looking at 15-minute, 1-hour charts to just find the levels and figure out where the breakouts and things are. But it really doesn't matter what time frame you look at. But for intraday price action, I really like the 5-minute because it's low enough that I can see where people are kind of getting caught, but not high enough to where if I get into a move on a 5-minute chart, I don't feel like I'm, a billion pips away from where I should have got in. This is good, but this is supposed to be up here. Yep, US 30, 1 bar pullback. Now I don't know if this is a breakout fake out and they just rip it to the downside, cool, but the way that this is curled and then traded back down into the low. Not that I'm looking to go long on this, I'm just saying. We'll see if it explodes to the downside further. Yep, that is true, Sean. 100%. Well, because everything we're doing is, it all should be based off of a 15-minute or a 1-hour setup or something like that. And we're just entering in on a lower time frame at the levels to get a better fill. It's a good way of thinking of it. I guess what I'm trying to say is the lower time frames really help with behavior of price once you get to the level. Because the level is what's important, understanding the breakouts and the who's trapped where and timing is everything, right? And then the lower time frames, 1 minute, 5 minute, they're really just there to help you better understand behavior of price at that level for the 3 push patterns and the the structure, the lower lows on the inside, the higher highs on the inside, X, Y, and Z. They can help you spot the ramped volume and all that stuff. You know, the signatures of what makes a good setup at the level. Okay, we've got 2 minutes to the news. Man, GU is perfect too. It's beautiful. The only other thing with GU is the volatility is so excuse me, holy cow. The volatility is so low that, you know, a lot of times you got to sit through. I mean, sometimes, yeah, they'll really start shooting in a direction, but a lot of times you got to sit through, you know, one pip at a time. Like, holy cow. Which is why I do tend to gravitate more towards indexes and things, because if there's a setup on a gold, oil, or indexes, you know, and you get in at the right time, that thing is going to start jumping 25, 50 pip increments. So I can be in and out and be done with my day. NASDAQ. No. Unfortunately, GU really just did not give me any sort of opportunity to get in. I mean, really anywhere after the news probably would have been fine, but I'm not chasing this down. It's just not something that I'm comfortable or willing to do. NASDAQ's a little engulfment here. Some really good setups today, though. It's just a matter of the timing of when things are occurring with the news on the calendar. It's kind of hindered me. Also, I don't know who said that US 30 being first green day, but this is a really good example of that first green day trap when you're in a market that's expanding to the downside and you get a first green day, paying attention to the consolidations at the beginning of the day. Where are people trapped? 50 pip box, volume's caught, it breaks down, goes sideways. One thing that you can definitely look for or look at, if this was a first green day and we had volume trapped down low, they shouldn't have came back. Or if they did, they should have retested and gave us an ascending channel for an explosion. But usually when you get a run into the close like this is one of the considerations I have for first green days is when they run it into the close like this, really paying attention to the next day. And this is exactly, what to look for the trap. That is a very, very common first green day trap. Let's see, how far down are we from the... Man, my computer does not like what I'm doing to it. There we go. So we're down, what is it, 600 pips now? what I'm going to do is I'm just going to leave most of these annotations up here for tomorrow. If I need to change them because something new is developed, then I'll definitely be putting that up there. Paul, you as well, and I'm looking forward to, Paulie, I'm looking forward to the rest of this week and just getting back to teaching. I've really missed teaching, so I've enjoyed my break, but I'm back. I'm ready to get it going again. But to get back to the first green day trap, what you were just asking, one of my criteria for first green day is, or considerations, if you will, is if, we've got volume trap down low and they run it up into the close, and that gives us our first green day. This next day should have put in, stop hunt low, peak formation low, and then basically traded back down into the low and engulfed at 9:30 and made a run, right? But they consolidated in a 50 pip box, really a 25 pip box all day long, like this, right? And then they broke down. So they broke down in the gap time and went sideways, triggering previous day's low, pumping back up and coiling sideways. That is the same thing that I showed you all, like I said, on gold last week. Same exact trade. But as far as first green day trap goes, if we have volume now trapped at the high of the week, we got a supposed first green day in a down moving market. The market's making breakouts to the downside, day 2 breakouts. Now we're into day 3 of breakouts. We're in a down moving market. They're breaking out to the downside, and you get a first green day. You got to be cautious of this, not just automatically assuming that it's going to go back up. Look at where the volume's caught. Think about structure. Lower lows, pump. Lower lows, pump. Trading back down into the low now. We're 600 pips down from the breakout. We could see a trending week this week. We could see maybe a day 3 reversal. So this is the 3rd day of breakouts. Maybe tomorrow we'll get a little pop-up. I don't know. But in strongly trending weeks, if you go back and look, in strongly trending weeks, you could have 4 or 5, 6 days of breakouts to the outside where they just keep on going lower or lower and higher and higher. And that's a strongly trending week. Do not counter trend those. Maybe wait for the next week for day 1, 2, and 3 of breakouts, or day 1, day 2 of breakouts. They're up high of week, low of week, whatever. Like, you might just need to transition it to the next week, because if it's a strongly trending week, you're going to get crushed. Keep on trying to counter trend. And that's one of the things that Steve Mauro talks about, and I really enjoyed listening to it, is the psychology of what they do. For example, right? This is breaking down. We're making lower lows. Retail loves the counter trend, right? Oh, it's going down. I'm going to try and get it cheaper and try and get it back up. I'm going to try and get it cheaper and get it back up. And you just keep on getting beat up all the way down for an entire week or 2 weeks or 3 days or whatever. And then once you finally feel defeated and you're like, oh, I need a break, I'm just going to take a moment to study. The next day or the next week, next thing you know, it's reversed, and you're like, oh my gosh, if I would have just been more patient. And it's like a repeating psychological cycle that the market does to you. So you just have to be careful. If you're in a strongly trending week, be very cautious. Yeah, exactly, Ian. Exactly. What does a really good reversal look like? Multiple weeks of breakouts to one side or the other. The first time that they're, if they're making lower lows, the first time they hit the previous week's high, that's going to be a really strong move, probably to the downside. Or if they consolidate down low in a tightly coiled week, and then it breaks out to the outside and closes higher, it could be a first green week, first week of breakouts, breakout, pullback, continuation. Those are like the things you got to really pay attention to. And something that I've heard Stacey say in the past was train your eyes to view price horizontally. I really like that. That's part of his teachings from way back when was, and also he talks about Peter Brandt and classical charting and stuff, and he really likes horizontal structure, rectangles and things like that. I love that because most breakouts fail. So if you have a high and a low and you draw your little rectangle, it removes a lot of the subjectivity of, well, that could be a descending triangle, an ascending. There's so many different chart patterns that you almost fake your eyes out and look at things just because that's how you want to see things. But a rectangle or a box is a box. A box is a box is a box, you know. It removes so much subjectivity away from, is that this pattern to this pattern? Is that a cup and handle, a head and walrus seal pattern? I have no idea. There's so many patterns out there that it's funny. And then you see these patterns get renamed throughout the years, and all the names are just hilarious. And it's like, holy cow. I've been making jokes about the pink rabbit. The pink rabbit is not a new pattern. It's not anything. It's just a joke. The pink rabbit is like the types of trades that I have to trade them. The trades that they're set up so well that it's perfect. And I should be in this trade, and I should be holding. 3 weeks of breakouts, 3 sessions, 3 days of breakouts. 3 sessions outside of a breakout on day 3. Like, those are my pink rabbits. But basically just the ones that stand out the most to me. If you saw a pink rabbit, you'd be like, oh my gosh, look at that. That's the joke behind it. It's really kind of stupid, but... we get up into... Okay, hold on. Yeah, exactly. Pink rabbit's the metaphor for the obvious. When you look at it, you have no doubt, you have no fear or any other emotions. It's just, this is the best trade setup that I have seen all week or all month. This is the one that I need to be a part of. There's no, well, it could go up or it could go down. No, that is the trade. That is the peak formation. That is the engulfment. That is my entry. I'm going to hold this until here because that's where the setup says it's supposed to go to. And I'm going to size in. I'm going to put as much as I can be comfortable with on that trade because that is my trade. But yeah, it's just a metaphor for the obvious. It's also why I don't really care for like the low-hanging fruit trade. It's definitely my least favorite because psychologically I found myself in the past justifying trades just because it's going down and it's pumped up, and I justify it as it's just a low-hanging fruit. Very dangerous way of thinking, and I've caught that about myself, that I try to at times justify a trade just because, well, it's just a low-hanging fruit. So I stopped taking low-hanging fruits, and that's one of the trades that I kept on getting banged up on in the past, kind of taking nickel and dime losses that are stupid. It's silly. If you have a trade setup that isn't making you money, or things that you have tried to justify as a trade setup and it's not making you money, just remove it. So I've kind of removed that from my repertoire, if you will, because it wasn't making. If it did, it was making me nickels and dimes, And, it's just not a good business opportunity. I'd rather just wait for day 3, level 3, 3 sessions of breakouts. Those big explosive trades. Well, exactly. That's what made me think of it. Blue is, this is one of those examples where I could say, well, this is pumped up 50 pips in a down moving market. Maybe this is going to turn into a low hanging fruit, and it very well could. We're in the 3rd hour, but it's also put in a consolidation peak formation at the low of the day, low of the week. I think it's low of the week, right? Yeah, they traded back down in the peak formation low that was made on Monday. But that's what I'm talking about. Was like, well, I could justify this as a low-hanging fruit, but is it really worth it, in my opinion? I don't know. Probably not. Is it worth the loss if I'm wrong? No. I don't think it is. Oh, it just got real quiet in here. It felt weird. Although some of you are probably like, man, this guy never shuts up. He just keeps running his mouth. But if it gets quiet, I don't know, it feels weird. I hope you all are doing well. Hopefully this is helping y'all. At the very least, maybe with patience. Maybe just seeing somebody not take a trade every 30 seconds is helping. I don't know. But, not taking trades for the right reason is a good business plan. Like I said, if it's we hunting wabbits, I love it. Well, you put the R in there, Kurt. You gotta put the W. A little bit of Looney Tunes. And I'm going to try and do my best. I'll wake up a little bit earlier in the future and do what I did today. Did you all think that the way that I set up the screen this morning with all my thoughts up there, was that really beneficial for you all? Having day 1, 2, and 3 and of the cycle and breakouts and all that stuff up there. Was that pretty beneficial to y'all's thought process? Or at least a viewership into my own brain, hopefully. All right. I'll make sure I'll get up a little bit earlier from now on and do that same thing. Yeah, TR, I'm sorry. That's why I tried to do it. If I don't put it up there on the screen prior to me saying all of it, I'm going to go even faster because I'm going to be rushing because we're going to be into the session. I'm going to be rushing to try and get all my thoughts up there, and I don't want to do that, right? For my own benefit as well as you all's. I don't want to rush and miss something. which I will tend to do if I do it that way. So I will, for that, thank you for bringing that up. I'll try to go a little bit slower tomorrow. I'm always trying to keep it as slow as I can, but I do wish that there was a better way of doing it, but sometimes you just gotta kind of go through. I think the best thing you could do is, if you're confused about anything, just go back and watch my playlist. You can watch Stacey's playlist, whoever, and just get the information somehow, some way. You put the video on 0.5 speed, watch it 3 times, take notes. A plus B equals C, right? If we've got day 1 of breakouts, what does that equal? If there's volume trapped, at the low or the high of the week, what does that equal? If we have a day 1 breakout on a Monday and day 2 tries to expand the range and fails, what does that, I like to think of things like that in kind of equation form, and build yourself little equations. Really hammer down, exactly what to look for, and then come to these streams and go, okay, well, he's got day 1 breakouts up there. He's looking for X, Y, and Z. Monday, Tuesday's built a box. What did Monday, Tuesday do? Look at the tips and tricks slide so you know what my thought process is between Monday and Tuesday. Friday, Monday, if Monday or Friday puts in a peak formation high and Monday puts in a peak formation low, what does that mean for Tuesday? A plus B equals C. What setup is he looking for? Those types of things will help. And then seeing me do it in live time is my hope for you all, is that watching the videos gets you a general consensus or a general idea, and then coming to these live streams and seeing me do it will help you to develop the patience. It'll help you to know how I'm maneuvering the news calendar. If there's a setup and the news hasn't played out yet, why is he not taking the trade? Well, he doesn't like to take trades before the news. Okay, well. So, for example, TR, like Monday. Monday was a breakout. All right, we broke higher. Breakout, pullback. They closed up high. We came down low. We put in a peak formation high. London had a higher high on the inside. We're consolidating underneath the previous day's high, and we have breakouts in on the first day of the week. So what could your thought process be? Well, Tuesday typically expands the range, and we're consolidating underneath previous day's high in a breakout market to the upside. That's a trading setup. Higher high on the inside, dumps it down, goes into consolidation, and engulfs to the upside. Expansion of the range on day 2. Trend trade. Expansion of the range on day 2. That's a trading setup. We could have looked for this exact same setup if it did this exact same thing in New York. Except day 2, we broke out, put in a peak formation high at the high of the day, and then broke down and coiled sideways above the low of the day, above numbers. So now it could be a reversal short from coming off of the high of the week. And we're also in a 300 pip box, right? So it's understanding the setup, but also understanding once the setup is played out, how it continues to evolve throughout the day, because you might still be looking for this over here, but it's already happened over here. This was the trading setup. I can't see anything that's going to happen to the right. I just know that this is the setup that I'm looking for on day 2 with breakouts in the market. 3 levels of drop. 1, 2, 3. All right, so it's not quite 3, but peak formation high. 1, 2, 3 to the low. Anyways. Hopefully that makes sense. Now, day 3, Wednesday, if I'm looking at weekly template, day 3, what do I want to see? Monday's the opening range. Tuesday's the initial balance. I'm going to look for the peak formations. Was Tuesday a day 1 of the 3-day cycle? Because that could restart a new day count for 3-day cycle. How did Monday, Tuesday behave? Think of it like a math equation. Monday, Tuesday equals Wednesday. And that's how I view everything. And it sounds complicated, and I think that it could be in the beginning, but once you start to really see the patterns over and over again, that's where it becomes simple. And it's like, okay, well, breakout, only 3 things markets do. There's a few concepts that are in line with that. But once you understand the concepts, it's like, okay, well, it all makes sense. Which is why I think I was able to pick it up quickly, was because I filled in the blanks and I started putting things in sort of math equation form of, like, I'm not a mathematician by any means, but thinking of it like that in A plus B equals C. If this day does this, if this day does this, what were the characteristics of that? What's the 3-day template? And then, you know, looking for the setup on that day. Anyways. Could you... Yeah, so again, gold. TR. Let's do this. I'm probably not going to take a trade today. It's too late in the session, but Friday's high. Friday was also day 1 of the 3-day cycle. Monday is opening range, right? High and a low. That's our high and a low of the week. And it was also a breakout of Friday's high. Okay, so we have 1 day of, this is the first day of breakouts in the market. So with 1 day of breakouts in the market, one of 2 things is going to happen. They either have breakout traders trapped at the high of the week on day 1, and they're going to reverse strongly, which they did at the beginning of London, or they're going to break out, and then to continue that trend, they're going to drop 3 levels. So 50, 50, and 50 from high of day down to low of the day, go into consolidation, put in a peak formation, and then run the market in a trend trade back up through the high. Day 2 typically expands the range. Day 2, previous day's high, typically expands the range. So we've dropped down, we had a breakout day to the upside, so we might be looking for a dump and a pump, a trend trade. Peak formation was made at the high of the day, and they've dropped it 3 levels of drop. London session, gone into consolidation, put in a peak formation at 50. And then in the gap time, there was a parabolic trade back up through to expand the range to the upside. Initial balance, day 2. And you can see how those setups can kind of evolve, right? Now, the setup was down here, and there was a trend continuation at 9:10. This is the low-hanging fruit back up to expand the range to the upside. There's the engulfment. I think I'm on a 5-minute chart, right? Yep. There's the engulfment. There's the run. This is an easy 50 pips. Not my forte, not my go-to setup, so I didn't take this. But you could have been over and done with in 10 minutes or so, if that is a setup that you actually want to take. Now, I prefer to trade these types of trades over here at the bottom. I like to be at the bottom. We've got 3 levels of drop. I'm in that 3rd level. I want to take my trade coming out of level 3 because that's where I feel the safest. But once we get up here, I don't know how deep the pullback's going to be. I start to have doubt and fear come in, right? And I don't want that. I want to feel like I'm trading with some degree of certainty. So that's not my go-to. TR, did that make sense? Peak formation high, peak formation low, consolidation, vertical move. Oh boy. And I'm like to think that I'm highly selective in the sense that, if a certain move is not happening at a certain time of day, then I just don't take it, because I have found through my own results that I tend to get punched in the face if I don't trade at 9:30 or after 9:30. 9:30 to 10:30 is my sweet spot. Those are when I take the best setups, the best candidates, because those are usually, if there is a very large parabolic move, a lot of times they will happen 9:30, 10 o'clock, that third hour. And those are the types of trades that I personally want to take. NQ or NS. Or ES, excuse me. Let's see, so gold. Let's go back to... No, I'm not seeing anything right now. I think this... What is this? Average stop punt is 25 to 50 pips outside of a range. Low of the day was at 25, so they've gone 50 pips outside of the range and pulled back on the inside. I don't know if they're going to, if this does develop into low-hanging fruit, I don't know, back down through the low. But I would be trading myself into the low of the week in the middle of a box. I don't know if I like that. This is another one push. This is a 5-minute chart. 1, 2, 3. On the third push, they've now engulfed the 5-minute chart. This bar closed lower in the previous bar. This could be low-hanging fruit down through coming out of level 3 as well. First bounce, could be. I don't know. Again, I don't feel comfortable taking this, so I'm not going to. All right. Ladies and gentlemen, I think that this is going to be it for me today. I don't have any fantastic opportunities set up. Man, we're late in the session, so I really hope you all have enjoyed. I'll be here again tomorrow doing the same exact thing. Really enjoyed kind of getting back into the grind, and you all have been fantastic. So I will see you all tomorrow morning, same time, 8:30. Ready to go. I'll have all my annotations up there for you. And yeah, I'll see you all tomorrow. You have a good day. Bye-bye.